Question 1. Which of the following is the primary difference between short-term and long-term disability insurance? A. Short-term disability insurance covers only injuries, while long-term disability covers both injuries and illnesses. B. Short-term disability insurance has a longer elimination period compared to long-term disability insurance. C. Short-term disability insurance provides benefits for a limited time, while long-term disability insurance can continue for several years or until retirement. D. Short-term disability insurance is typically more expensive than long-term disability insurance. Answer: C. Short-term disability insurance provides benefits for a limited time, while long-term disability insurance can continue for several years or until retirement. Explanation: the key difference between short-term and long-term disability insurance lies in the duration of the benefits. Short-term disability insurance typically covers benefits for a period of several weeks to a few months, while long-term disability insurance provides coverage for extended periods, potentially for years or until the individual reaches retirement age. Elimination period: short-term policies often have a shorter elimination period, the waiting time before benefits begin, while long-term disability policies may have a longer waiting period. Benefit duration: short-term disability insurance is meant to replace income for a short period, whereas long-term disability insurance is designed to replace income for a much longer time, sometimes covering a person's entire working life. Question 2. Mr. Davis has been employed as a construction worker for the past 15 years. He recently experienced a serious back injury while on the job, causing him to be unable to perform his usual work duties. He is considering applying for disability insurance. What should Mr. Davis do to ensure his claim is processed correctly? A. Submit only the medical records from his family doctor to the insurance company. B. Provide both his medical records and documentation from his employer, including information about the nature of his work and the injury. C. Only submit a statement from his employer that confirms he cannot work. D. Submit an online application without providing any supporting documentation, as medical and employment verification are not required. Answer: B. Provide both his medical records and documentation from his employer, including information about the nature of his work and the injury. Explanation: when filing a disability claim, it is critical to provide comprehensive documentation to support the claim. This includes medical records, essential to confirm the diagnosis, treatment, and the extent of the disability. Employer documentation: the insurance company needs to understand the nature of the individual's job and the impact the injury has on their ability to perform work duties. Documentation from the employer helps verify the occupation and the specifics of the work that was affected by the injury. Insurance claims often require both medical and employment-related documentation to assess whether the injury is disabling and impacts the claimant's ability to perform their job. Note: submitting only one form of documentation, such as just a medical statement, may lead to a denial or delay in the claims process. Question 3. What impact do pre-existing conditions typically have on a disability insurance claim under Nebraska regulations? A. Pre-existing conditions are always excluded from coverage under all disability insurance policies. B. Pre-existing conditions may be covered if the individual has been symptom-free for a specified period before the policy was issued. C. Pre-existing conditions never affect disability claims in Nebraska as long as the injury occurs after the policy begins. D. Pre-existing conditions are covered immediately as long as the policyholder is under 50 years of age. Answer: B. Pre-existing conditions may be covered if the individual has been symptom-free for a specified period before the policy was issued. Explanation: under Nebraska disability insurance regulations, many policies include a pre-existing conditions clause, which restricts coverage for any conditions that existed before the policy was issued. However, some policies allow coverage for pre-existing conditions if the individual has been symptom-free for a specified period, commonly 12 months or more, before applying for the insurance or before the disability occurs. This stipulation is essential to reduce the insurer's risk of covering conditions that were already present at the time the policy began. If a disability results from a pre-existing condition that was not disclosed during the underwriting process or falls within the exclusion period, the claim may be denied. Important note: the precise exclusion and waiting period rules can vary by insurer and policy type, so policyholders need to carefully review the terms before applying. Question 4. Which of the following is a key characteristic of one occupation disability insurance coverage? A. The insured is covered only if they cannot perform any occupation, regardless of their previous job. B. The insured is covered only if they are unable to perform their specific occupation, even if they can work in a different field. C. The insured is covered only for the first 6 months of disability. D. The insured is covered only if they are unable to perform activities of daily living. Answer: B. The insured is covered only if they are unable to perform their specific occupation, even if they can work in a different field. Explanation: Monoccupation coverage is a type of disability insurance that provides benefits if the insured is unable to perform their specific occupation, regardless of whether they can work in another occupation. For example, if a surgeon becomes unable to perform surgery but can still work in a different job, the surgeon may still receive benefits under an occupation policy. This coverage is more favorable to workers in specialized fields where the loss of their primary occupation has a significant financial impact. The opposite of this coverage is any occupation coverage, where the insured would only be eligible for benefits if they cannot perform any occupation for which they are reasonably suited by education, training, or experience. Question 5. Which of the following factors would most likely influence an underwriting decision for a disability insurance policy? A. The insured's marital status. B. The insured's employment history and job duties. C. The insured's age at the time of claim submission. D. The insured's geographic location. Answer: B. The insured's employment history and job duties. Explanation: In disability insurance underwriting, an insurer evaluates a number of risk factors to determine the likelihood of a claim. Among the most significant are employment history and job duties. Insurers assess the type of work an individual performs as certain occupations, e.g., construction workers, pilots, or manual laborers, carry a higher risk for disability. The level of physical activity involved, exposure to hazards, and the job's demands are key considerations in the underwriting process. Other factors, age, lifestyle, e.g., smoking, alcohol use, and medical history are also taken into account. However, marital status and geographic location are generally not as directly impactful in the underwriting process unless they influence the risk profile indirectly. Question 6. Mr. Garcia is receiving disability benefits through his employer's group disability insurance policy. If he later applies for Social Security Disability Insurance (SCI), how might his benefits be affected? A. His disability insurance benefits will continue without any adjustments. B. His disability insurance benefits will increase to cover the gap between SSDI and his regular income. C. His disability insurance benefits may be reduced depending on how much he receives from SSDI. D. He will lose all of his disability benefits if he qualifies for SSDI. Answer: C. His disability insurance benefits may be reduced depending on how much he receives from SSDI. Explanation: Many group disability policies, including those under coordination of benefits provisions, require the insured to apply for Social Security Disability Insurance (SSDI). If Mr. Garcia qualifies for SSDI, his private disability insurance benefits may be reduced to prevent double recovery. Receiving full income replacement from both SSDI and private disability insurance, the policy may have a benefit offset clause, which reduces the amount of the disability benefits to account for other sources of income like SSDI or workers' compensation. The reduction is typically limited to the amount Mr. Garcia receives from SSDI, ensuring that the total income does not exceed a set percentage of his pre-disability earnings. Question 7. Which of the following is true regarding the elimination period in a disability insurance policy? A. The elimination period refers to the time it takes for the policyholder to become eligible for benefits after the disability begins. B. The elimination period is a fixed period that cannot be adjusted once the policy is issued. C. The elimination period is the amount of time the policyholder must wait before applying for disability benefits. D. The elimination period is used to determine the maximum length of time that benefits will be paid. Answer 8. The elimination period refers to the time it takes for the policyholder to become eligible for benefits after the disability begins. Explanation: The elimination period is the waiting period between the onset of the disability and the time the insured is eligible to begin receiving disability benefits. This period functions like a deductible, as the insured must wait for the specified number of days, e.g., 30, 60, or 90 days before the insurer starts paying benefits. The elimination period can vary by policy, and its length can impact the cost of premiums. Generally, the longer the elimination period, the lower the premium. Note: the elimination period does not refer to how long the benefits will last or when the policyholder can apply for benefits, but rather the waiting time until benefits are paid. Question 8. Which of the following types of disability insurance is most likely to cover a self-employed individual? A. Group disability insurance. B. Short-term disability insurance. C. Long-term disability insurance. D. Disability insurance for high-risk occupations. Answer: C. Long-term disability insurance. Explanation: self-employed individuals are typically not eligible for group disability insurance since this type of insurance is offered by employers to their employees. Long-term disability insurance is the most suitable option for self-employed individuals, as it provides coverage for an extended period of time, replacing a percentage of lost income if the individual is unable to work due to disability. Self-employed individuals can purchase individual policies, which can offer both short-term and long-term disability coverage. However, long-term policies are more common for replacing income over time, especially for those who do not have other benefits available through an employer. Question 9. Which of the following riders would most likely be added to a disability insurance policy to help adjust the benefit amount over time? A. Non-cancelable rider. B. Future increase option rider. C. Waiver of premium rider. D. Cost of living adjustment COLA rider. Answer: D. Cost of living adjustment COLA rider. Explanation: a cost of living adjustment COLA rider is designed to help protect disability benefits from inflation by increasing the benefit amount over time. Purpose: this rider ensures that as the cost of living rises, the benefits received by the insured will increase as well, which helps maintain the purchasing power of the benefits. Other riders: future increase option rider allows the insured to increase their coverage at future intervals without undergoing additional underwriting. Waiver of premium rider waives premium payments while the insured is disabled but does not affect the benefit amount. Question 10. Which of the following best describes the claims process for disability insurance under Nebraska regulations? A. Claims must be submitted in person at the insurance company's local office. B. Claims must be submitted within 6 months of the disability's onset or they will be denied. C. The claimant must submit medical records and proof of income to process the claim. D. Claims can be submitted only by the claimant's family members, not the policyholder. Answer: C. The claimant must submit medical records and proof of income to process the claim. Explanation: to process a disability insurance claim, the insured must provide sufficient evidence to demonstrate that they meet the eligibility requirements. In Nebraska, this typically includes medical records. To verify the disability and its severity, the insured will need to submit documentation from healthcare providers detailing the diagnosis, treatment, and prognosis. Proof of income: since disability benefits are often a percentage of the individual's income, proof of income, e.g., pay stubs, tax returns, is necessary to calculate the benefit amount. Additional documentation: depending on the insurer, other documentation may include employment records or evidence of any other disability benefits the insured is receiving. Question 11. Which of the following would most likely be covered by a disability insurance policy's accident definition? A. A heart attack. B. A car accident resulting in a broken leg. C. A back injury due to lifting heavy boxes. D. A stroke caused by high blood pressure. Answer: B. A car accident resulting in a broken leg. Explanation: disability insurance policies often have specific definitions for accident and illness. Accidental injuries, such as those resulting from a car accident, are typically covered under the accident definition of a disability policy. A heart attack or stroke, on the other hand, would usually fall under an illness or medical condition rather than an accident. An injury caused by lifting heavy boxes could be considered an accident, but it may also fall under occupational injury or illness depending on the policy's language. Question 12. Which of the following is an example of a pre-existing condition clause in a disability insurance policy? A. The insurer will not pay for disability claims related to an illness that existed before the policy was purchased. B. The insurer will immediately pay disability benefits for any injuries that occur within the first 30 days of the policy. C. The insurer will increase benefits for disabilities related to pre-existing conditions after 6 months. D. The insurer will offer a discount on premiums for applicants with pre-existing conditions. Correct answer: A. The insurer will not pay for disability claims related to an illness that existed before the policy was purchased. Explanation: a pre-existing condition clause is a provision in many disability insurance policies that excludes coverage for injuries or illnesses that existed before the policy was issued. Insurers typically require a waiting period, e.g., 12 months, before they will cover disabilities related to pre-existing conditions, or they may exclude them altogether. This clause helps mitigate the risk of covering conditions that were known or being treated before purchasing the policy. Question 13. What does non-cancelable mean in the context of a disability insurance policy? A. The insurer can cancel the policy at any time if the insured's condition worsens. B. The insurer can change the premium rate only after 5 years. C. The insurer cannot cancel or change the terms of the policy as long as premiums are paid. D. The insurer cannot cancel the policy after the first year of coverage. Answer: C. The insurer cannot cancel or change the terms of the policy as long as premiums are paid. Explanation: a non-cancelable disability insurance policy ensures that the insurer cannot cancel the policy or change its terms, including premiums, as long as the insured continues to pay the required premiums. This provision offers the insured greater security, as it protects them from the insurer's ability to increase premiums or cancel the policy, regardless of the insured's health status or claims history. Question 14. Which of the following is the primary purpose of a known occupation rider in a disability insurance policy? A. To provide benefits for injuries occurring in high-risk occupations. B. To ensure the insured can only collect benefits if they are unable to perform any job. C. To limit the disability benefits if the insured can perform a different job. D. To provide additional income in case of an illness related to the insured's occupation. Answer: C. To limit the disability benefits if the insured can perform a different job. Explanation: a known occupation rider in disability insurance allows the insured to receive full benefits if they are unable to perform their specific occupation, even if they can perform another type of work. Without this rider, many policies provide benefits only if the insured cannot work in any occupation for which they are suited by training, education, or experience. The rider offers better protection for professionals and skilled workers who may lose their ability to work in their specialty but could still perform in a different role. Question 15. Which of the following factors is most important for determining the benefit period of each disability insurance policy? A. The insured's income at the time of the claim. B. The severity of the insured's disability. C. The insured's occupation and level of risk. D. The insurer's underwriting guidelines. Answer: B. The severity of the insured's disability. Explanation: the benefit period is the length of time that the disability insurance policy will pay benefits to the insured. This period can range from a few months to several years, or even until the insured reaches retirement age, depending on the policy and the insured's condition. The severity of the disability plays a key role in determining how long benefits will be paid. If the disability is permanent or long-term, the benefit period will likely be extended to ensure long-term financial support. Other factors like income or occupation may influence the amount of benefits but do not directly determine the duration of coverage. Question 16. Which of the following is a key feature of a return of premium rider in a disability insurance policy? A. The insured receives a lump sum payment if they never file a claim. B. The insurer returns all premiums paid if the insured becomes disabled. C. The insured can receive benefits in addition to other disability insurance coverage. D. The insurer pays a percentage of premium payments back after a set number of years. Answer: A. The insured receives a lump sum payment if they never file a claim. Explanation: a return of premium rider allows the insured to receive a refund of the premiums paid if no claims are made during the policy term. This rider provides a form of savings in case the insured does not need to file a claim. While this rider increases the premium cost of the disability insurance policy, it can offer peace of mind for individuals who may not expect to become disabled but still want to get value from the premiums they've paid. Question 17. What is the purpose of a waiver of premium rider in a disability insurance policy? A. To increase the premium after a disability claim is filed. B. To waive the requirement to pay premiums while the insured is disabled. C. To allow the insured to claim disability benefits without providing proof of income. D. To provide additional premiums to the insured if they become disabled. Answer: B. To waive the requirement to pay premiums while the insured is disabled. Explanation: a waiver of premium rider allows the insured to stop paying premiums if they become disabled. This ensures that the insured can maintain their coverage during a period when they may not be able to work and earn income. The rider typically applies after a certain waiting period, e.g. 90 days of disability, after which the insurer will waive further premium payments as long as the insured remains disabled. Question 18. Which of the following is a typical exclusion in a disability insurance policy? A. Disability resulting from a motor vehicle accident. B. Disability resulting from alcohol or drug abuse. C. Disability resulting from a sports injury. D. Disability resulting from an injury at work covered by workers' compensation. Answer: B. Disability resulting from alcohol or drug abuse. Explanation: disability insurance policies often contain exclusions that limit or deny benefits for certain types of disabilities. One of the most common exclusions is for disabilities caused by alcohol or drug abuse. This exclusion typically applies to self-inflicted injuries or disabilities caused by engaging in illegal or dangerous activities related to substance use. Disabilities from accidents, sports injuries, and workplace injuries are generally covered, though workplace injuries may also be covered under workers' compensation insurance. Question 19. Which of the following best describes the residual disability benefit in a disability insurance policy? A. It covers only a partial disability if the insured cannot perform any part of their job. B. It provides a partial benefit based on the loss of income due to disability. C. It provides coverage if the insured is unable to work for more than a year. D. It covers disabilities that occur after the policy term expires. Answer: B. It provides a partial benefit based on the loss of income due to disability. Explanation: the residual disability benefit is designed to help policyholders who are not totally disabled but have experienced a loss of income due to their disability. If the insured is still able to work part-time or at a reduced capacity but suffers a loss of income due to the disability, they may be eligible for partial benefits under this rider. This benefit is often used in situations where the insured cannot fully perform their job duties but is still able to work in some capacity. Question 20. What is the key benefit of adding a partial disability rider to a disability insurance policy? A. It increases the benefit amount for total disabilities. B. It ensures that benefits are paid for short-term disabilities only. C. It provides coverage if the insured is partially disabled but can still perform some work. D. It extends the benefit period for disabilities lasting longer than 24 months. Answer: C. It provides coverage if the insured is partially disabled but can still perform some work. Explanation: a partial disability rider provides benefits if the insured becomes partially disabled and can still perform some of their job duties, but not to the full extent they did before the disability. This rider is beneficial for individuals who experience a temporary or partial disability, allowing them to continue working while receiving a portion of their income through the disability policy. Question 21. What is typically considered the elimination period of each disability insurance policy? A. The period of time the insured must wait before coverage begins. B. The maximum period the policyholder can receive benefits. C. The number of days the insurer requires the insured to be continuously disabled before benefits are paid. D. The amount of premium the insured must pay before claims can be made. Answer: C. The number of days the insurer requires the insured to be continuously disabled before benefits are paid. Explanation: the elimination period is a waiting period during which the insured must be continuously disabled before disability benefits are paid. It is essentially a deductible period, and it typically ranges from 30 to 180 days. The insured must be disabled for this period before they are eligible to begin receiving benefits. Question 22. Which of the following is the primary purpose of a cost of living adjustment (COLA) rider in a disability insurance policy? A. To increase the benefit amount in line with inflation. B. To reduce the premiums if the insured becomes disabled. C. To provide additional coverage for certain medical expenses. D. To extend the benefit period if the insured becomes permanently disabled. Answer: A. To increase the benefit amount in line with inflation. Explanation: a cost of living adjustment (COLA) rider is designed to protect the purchasing power of the disability benefits by increasing the benefit amount each year based on an inflation index, typically tied to the Consumer Price Index (CPI). This ensures that benefits keep pace with inflation, maintaining the same value over time, especially in long-term disability situations. Question 23. Which of the following best describes the waiting period of each disability insurance policy? A. The amount of time before the policyholder must begin receiving benefits. B. The period of time before the insured must be continuously disabled for benefits to start. C. The time period after the insured's disability ends when they can still file for benefits. D. The time allowed for the insurer to process a claim before benefits are issued. Answer: B. The period of time before the insured must be continuously disabled for benefits to start. Explanation: the waiting period, also known as the elimination period, is the length of time an insured must wait after becoming disabled before they are eligible to start receiving disability benefits. The waiting period typically ranges from 30 to 180 days, and it may be waived or adjusted based on the insured's occupation or the policy terms. Question 24. Which of the following would most likely be considered as short-term disability under a disability insurance policy? A. An injury that prevents the insured from working for 3 weeks. B. A chronic illness that leads to long-term incapacity. C. A broken leg that requires several months to heal. D. An illness that results in the insured being unable to work for 12 months. Answer: A. An injury that prevents the insured from working for 3 weeks. Explanation: short-term disability usually covers temporary disabilities that last for a few weeks to a few months. Typically, policies cover short-term disabilities for up to 6 months, but the precise duration can vary depending on the policy terms. The key characteristic of short-term disability is that the injury or illness is temporary and does not result in long-term incapacity. Question 25. Which of the following is a key difference between a group and individual disability insurance policy? A. Group policies typically offer broader coverage with higher benefits. B. Group policies are purchased by an individual, while individual policies are purchased by an employer. C. Individual policies offer more flexibility in terms and benefits. D. Individual policies usually do not require medical underwriting. Answer: C. Individual policies offer more flexibility in terms and benefits. Explanation: individual disability insurance policies offer more flexibility in terms of coverage, benefit amounts, and riders because they are tailored to the individual's needs. In contrast, group disability policies are typically less customizable and often provided by an employer or organization for its members. Group policies may have lower premiums, but usually come with less flexibility and less comprehensive coverage compared to individual policies. Question 26. Which of the following is a typical limitation in a disability insurance policy's coverage? A. Coverage for disabilities resulting from a work-related accident. B. Coverage for a disability resulting from self-inflicted injuries. C. Coverage for accidents occurring during commuting to and from work. D. Coverage for disability benefits after the insured has been disabled for 5 years. Answer: B. Coverage for a disability resulting from self-inflicted injuries. Explanation: most disability insurance policies exclude coverage for disabilities resulting from self-inflicted injuries, e.g., suicide attempts or self-harm. These exclusions help protect the insurer from moral hazard, where an individual might intentionally harm themselves to collect benefits. Work-related accidents may be covered by workers' compensation, not disability insurance. Some policies cover disabilities from commuting accidents depending on the terms of the policy. Question 27. What does the total disability definition in a disability insurance policy typically refer to? A. The insured cannot work in any capacity, even part-time. B. The insured is unable to perform at least one of the major duties of their job. C. The insured is unable to perform their own occupation due to injury or illness. D. The insured is unable to perform any job in any occupation. Answer: C. The insured is unable to perform their own occupation due to injury or illness. Explanation: the total disability definition in most disability insurance policies typically refers to the inability to perform the essential duties of the insured's own occupation. This is a critical distinction in disability policies, as it may offer broader protection by providing benefits if the insured can no longer perform their specific job, even if they can work in a different occupation. Question 20. Which of the following is typically NOT covered by a disability insurance policy? A. Disability resulting from a car accident. B. Disability resulting from a sports injury. C. Disability resulting from a pre-existing condition. D. Disability resulting from a stroke. Answer: C. Disability resulting from a pre-existing condition. Explanation: disability insurance policies often contain exclusions for disabilities arising from pre-existing conditions, which are illnesses or injuries that the insured had prior to purchasing the policy. These exclusions are designed to prevent individuals from purchasing coverage after a condition is diagnosed and immediately filing a claim for it. Car accidents, sports injuries, and strokes may be covered depending on the terms of the policy. Question 29. Which of the following best describes residual disability, ECA disability insurance policy? A. Benefits are paid when the insured is completely disabled. B. Benefits are paid for partial disabilities where the insured can still work but at a reduced capacity. C. Benefits are paid only if the insured is unable to work due to sickness or injury. D. Benefits are paid only if the insured is permanently disabled. Answer: B. Benefits are paid for partial disabilities where the insured can still work but at a reduced capacity. Explanation: residual disability coverage provides benefits to insured individuals who are partially disabled and can still work but with a reduced capacity. These benefits are based on the loss of income due to the disability, meaning the insured may still earn some income but at a diminished level. This rider is important for those whose disabilities do not completely prevent them from working but still impact their earnings. Question 30. What is the typical impact of a contestability period? A disability insurance policy. A. The insurer cannot challenge the claim for a disability during the first 2 years. B. The insurer can contest a claim if the insured becomes disabled within the first 2 years of coverage. C. The insurer must provide full benefits for the first 12 months regardless of the disability. D. The insurer can cancel the policy during the first year of coverage for any reason. Answer: B. The insurer can contest a claim if the insured becomes disabled within the first 2 years of coverage. Explanation: the contestability period typically lasts for 2 years after disability insurance policy is issued. During this period, the insurer has the right to contest a claim or void the policy if there is evidence of fraud or misrepresentation in the application process. After this period, the policy becomes incontestable and the insurer cannot cancel the policy or deny claims based on misstatements made during the application process except in cases of fraud.